Alrighty, welcome guys. We are here. We are going to be talking about my favorite indicators. We're going to be talking about how to put them on your charts, how to more importantly use them, and why I chose this kind of group after years and years of going through as many as you can name, just about every indicator you can imagine. And I'll show you which ones I keep on my charts now. So I think that this is going to be a very actionable one compared to some of the other ones, which were more theory based. So sometimes when I'm talking about ICT or Wyckoff diagrams or something like that, it can be a little hard to say, okay, how do I integrate into this into my trading tomorrow? So I think this will be a little bit more of an immediate impact, and it takes a little less time for some of these ideas to click compared to some of the more abstract ones. So I'm really excited for this. I am a big indicator guy overall. I'm a very technical trader, and I think that I have a lot of edge to help share with you guys here. So a little bit of a different structure than usual. I figured this time it's better to just get in the charts and show you what I'm doing on the charts as opposed to a bunch of slide decks, just to remember, keep this very, very concrete. So we're going to get into some really good stuff here, and I think we should just jump right in. So let me switch to our charts here. Boom, we are in. Okay, great. So I have a naked chart here, just my drawings on it. No indicators as of now. So there's a few things that I want to start with, and then we'll kind of build off of that. First, nice and simple, volume right at the bottom here. I think it's super important to always have volume on your screens. It is the most bang for your buck you're going to get out of any quote unquote indicator. I almost don't even consider it an indicator just because it's just always on my charts. It's not like something that I ever want to not have. It's not like something that's that you could live without, because once you start trading off volume analysis, it'd be like trading without regular candles. I need to see it because I need to see whether the moves that I'm seeing on the candles have confluence with the moves that I'm seeing on the volume candles. So let me talk about what I mean by that. When you have a big green candle like this, you want to see it accompanied by high volume. And this is a little more clear on the daily chart, I think. So we bottomed off of high green volume in combination with a nice big green body. And this is a very common thing. You'll see this bottom before we push up nicely. Big green volume here. And we can also see that moves often end on the volume too. So maybe we didn't get the big green volume immediately off this bottom, but we did get kind of a washout on this. It wasn't a massive red bar after some really big ones. So this one had a bigger body off of lower volume, and this one had a smaller body off of higher volume. So there's a divergence there, right? So I'm just pulling this back randomly to give some examples here. And so see, this was a red candle with high volume, but they couldn't push it down. And then the move continued. So this is one that I think is really crucial for everybody to have on their screens. It's just easy money, right? If you start to learn with this, you don't really need much else. There are a few that I consider essential on top of volume, but we're starting here. I think it's just an amazing thing to have. If you don't, get it. I'm assuming most of you have volume on your screen, so we're starting simple here. Getting a little more complex and kind of hinting at a future webinar that we're going to be doing on volume analysis overall is the volume profile. So the volume profile here is on the left side. And just like the volume on the bottom tells us the story about the size of moves on a time axis, this tells us about the size of shares traded on the price axis. So you see we have this big shelf here, and this is where we consolidated, pushed above, went underneath, pushed above. It always wanted to retransact this area of high volume. So having this on your charts gives you like a 3D view of what's going on in the market, because we don't want to just know what's happening on certain times. We also need to know what's happening at certain levels, right? Those are our two big axes that we're working off of here. So volume profile, very, very important. And it really does tell quite a story when you combine it with this volume, and it allows you to really pinpoint areas. Like we have this big volume shelf that we're building up here. Let's bring it back here so we don't see the future volume. We see this big volume shelf here and we consolidate. And everybody's wondering, what are we doing down here, right? Are we going up? Are we going down? We just kind of broken out here, but we were kind of in no man's land at the time. And by seeing this build out here, and then seeing what we actually see in the volume candles here, let's zoom in. We see big red, but they can't push it down. Another big red, they can't really push it down much. And then big green comes in here. And so what I'm kind of framing this as is, okay, the bears are failing to get much work done here. And this whole time on the volume profile, we're building out this shelf. And so this acts as a launch pad essentially. And you can see once we kind of digest through the movement here, once we kind of get through all of those bears that were trying to sell on decently high volume, but they were not able to do much work, then we see this become a launch pad and we just boost off of there. And now we can scroll a little bit more and we see that there's going to be volume building up basically as we go. And this provides the sustained move. And when we zoom out here, let's zoom out. We were looking at this consolidation. We will see essentially, there it is. So once we clear this, this becomes like a new volume shelf and we basically look to expand off of that. So this is, I would say, even more helpful when we're trading in a range like we have recently. And that's because you can look back and see where the volume shelves were on the way up. And you'll get a few very key kind of takeaways from this strategy. What you'll notice is that when there is a volume shelf and we're below that volume shelf and starting to bottom, that volume shelf, like right here at 540, right here at 555, and right here at 565, these are going to act as magnets because prices below them and a lot of shares are traded up here. So we'll have an incentive to kind of pull up to that. And so it's really important to have these areas marked out in advance. And that's really helped me set my biases on targets on the way up here. And it will allow you to really pinpoint trades from low volume nodes, like where we were bottoming, to the high volume nodes where our targets are. So in general, remember, for volume profile, you are trading shelf to shelf, and you can often get really clean moves through the areas of low liquidity. Find you one more example on here once this loads. This is really, oops, where'd it go? So I have a variable range here. So that means every time I change what is visible on the charts, you'll see some adaptation there on this side. But in general, so see how we were just posting this beautiful hammer candle today. I think that we are due to transact at the very least this 590 handle. See where that volume shelf starts. And then there's a decent chance we work our way back up to 600. But in general, this whole shelf from 590 to 604-ish, that's the area that I'm going to be targeting and looking for changes of character. So whenever you have the big volume shelf, you look for price to trade into it, and then you watch what happens. Because the clean move, the one that we're high confidence in, is that we're going to get a directional move to that magnet. But after that, the magnet may pull off, and then all of a sudden, the force that was pulling us up there might reverse. It might need time to digest and consolidate, or rarely it might surge through. But in general, we are looking for changes of character once we reach our target. So volume profile, an amazing indicator to have. I think it's always worth a slot on your trading view here, or this is also an option on Thinkorswim and just about anything you use for charts. So highly recommended. And obviously our volume is a key component of this. So I consider them one indicator because they're just how I read volume. So I wanted to start there because I think that volume is super key for any kind of trading style you have. But I think that we can hone in a little bit deeper and get some more nice basic indicators on your charts. And remember, the idea here is to not clutter things too much, right? We don't want to have so many lines on your chart that you can't read it. So what we're working towards here is incrementally building and adding things that will give you more information without kind of cluttering your overall trading style. So if there's an indicator that I add that you're not a fan of, there is no shame in not integrating that into your system. and only integrating it if and when you feel like you need the edge that the new information provides. So in general, we're going to be sticking to pretty basic things here. But in that spirit, I'm going to turn on my multi-indicator here. Oh, really quickly, let's go over how to add these just in case anybody's not familiar. On top here, we have indicators, and you can save all of your favorited ones for easy access. You can pop them on or off your charts. But the ones that I have are just volume. And then I have VRVP, which is visible range volume profile. So the next one we're adding is a multi-indicator, and this will give us different moving averages. It'll give us VWAP, and it'll give us Bollinger Bands all in one slot. So if you're on TradingView and you have limited slots here, then you can really just get the most bang for your buck with this one in particular. It's called OM multi-indicator. It's by David Hamilton here. It's a really nice piece of code, and we're gonna pop it on and see what we see. We'll go to the hourly. All right, let's talk about what we added here. First off, we have our moving averages. This purple here is the 200-day moving average. I think that this is an indicator that everybody should have on their charts, no matter what time frame. So the 200 is a very, very critical moving average for a lot of reasons. It's one that institutions watch a ton, especially on daily charts or weekly charts. As you can see here, this purple 200-day has been very responsive the whole way down and up. So it tried to hold here. When it lost, it kind of fell off the face of the earth. Then it tried to kind of reclaim here. After the failed reclaim is when the sell really started. And then ever since we found a bottom long term, we've just been pushing up to meet it again. And if we go to a weekly, we're still above it. So that's something to note, that this might be a future target downside eventually, just something to keep in mind. But what the most important thing is that these on the weekly, daily, and monthly timeframes, they're considered very, very big points of interest for institutions to get long. So you might have a stock like Apple, for example. If you are an institution and you only buy stocks off of the 200-week moving average, then you haven't had a chance to buy Apple since 2016. And the first chance you had to buy it since then was March 25th or March 2025. So just think about that. If you're the way you trade, the way that your fund is run is that you only look for deep discounts on stocks, and you represent that with a 200-week moving average, this is the very first chance that you've gotten to buy, which means that there will always be significant buying pressure off of these first taps. It's just one of those things. And we can even look at the daily, because I think more institutions operate off of the daily. What the heck is going on with my chart here? That's strange. Okay, I'm not sure what's going on here. We're going to use a different example because I've never seen that in my life. Let's just go back to SPY, or how about JPM? That's a good one. So JPM is another one of these ones where if you're a 200-day investor, you got a chance way down here in October 2023, and you've just been sitting and waiting until right here. Nothing works right on Mondays. Absolutely, DJ 2 a.m. I don't know what's going on, but we're all getting it together here. So we have this touch on JPM on the 200, and we have an immediate reaction off of this. I can pull up so many charts like this, and you'll see why it's so worth it to have it on your screen. Look, Hood is another high flyer, right? It was getting way too extended to the upside. What does it do? Comes down, taps the 200-day moving average, and just instant rockets off of there, right? Crazy moves on these. So you'll find this just about constantly if you look around. I'm trying to think of a few more examples. In my server, we call these crime taps because they will just, they're going higher, and then they just knife into oblivion, but they always seem to try to catch very significantly at the 200-day. So that's why I have the 200-day on all of my charts, the 200 moving average. So I also have this on weeklies, and then I also have it on hourlies. I have it on literally everything because you will just find it works so well for a trend change. So see on the hourly, there's always going to be multiple taps here. And, we try to outsurge it. If you think this move's real, you look for the back test and see if it holds. It got stuck under it pretty immediately and could never reclaim it. So that's a pretty good indicator that the move isn't done here. It needed to go down to the daily moving average, 200 moving average down here. But after it reloaded there, you'll see now it's trading above. So just like over here, we were checking out on this peak here, we were checking out to see if the back test here would hold, and it did not. We're doing the same thing here. First back test held and pushed off. That's a good sign. And then this second back test here, that's cash money. And that's a great entry right there. And as you can see, now we're just riding it up. On this hourly time frame, we back tested again, and we're still off to the races. Just to kind of flesh out the theory a little more, let's zoom in and see if this works on 15 minutes. I have a feeling it will. So again, right here, when we're able to finally kind of flip it after trading below it for quite a while, then it just never looks back, basically. I'm getting super granular. You will often find on these multiple day trends in the morning, they never really lose that 200-minute moving average. So the 200 is great on a minute chart too, because it essentially intraday will tell you what the general trend is. It's obviously there's some nuance to this, but in general, if you're in an uptrend on a daily time frame, and as long as you can stay above this 200-minute, you're going to just keep on running up. And see at the very end, it de-risked a little, but even then, it was like almost like it was waiting for this price to catch up. So we have our 200-minute on all time, or our 200 moving average on all time frames. Now I want to talk about some of the other ones we added here. I think the 200 is the most important, but there are a few others that I use every single day. The first is the 50, this green line right here. This is a great kind of intermediate trend level. So it's not as definitive in terms of catching the bottoms of big trends or the tops, if we're trading up into a 200, but it is very good for just kind of gauging where we are in that kind of middle space. So let's get back on SPY here. And we'll talk about this 50-day moving average. So on this whole move up, for the most part, we were just riding these short-term moving averages, which we'll talk about. But what we were doing when we were long in here riding this up, when we lost the yellow, which is a 21 EMA, we'll get to that in detail in a sec. But then we were always looking for what it did off of this 50 here. Sure, it can lose it, but then see it back tests it and then puts a higher bottom in and tries to push above. So there's still a lot of reactivity to this level. And if you're above the 200 and you're overextended riding these short terms, you want to see what it does at the 50. And essentially how all these moving averages work is once you claim the more important higher level one, so the 200, for example, then you start to see if you can hold the next major one up. Some people use the 100, I use the 50. Both are pretty interchangeable just in terms of their purpose, right? Because they're in between your long-term moving averages and your short-term moving averages. So it's a good one to keep an eye on. And as you can see, like we were overextended again here and we were trying to hold this. And then this was kind of a sign of a quick capitulation here. This was the yen carry trade blow up thing. But essentially, what did we do? We tried to hold it 3 times. We flushed it, but we didn't need to retest the 200. After this candle here, it was pretty clear to see that, okay, so we did lose this, but we weren't really ready to test this yet. So probably what we need to do is retransact this 50 again and kind of reevaluate up there and say, okay, are we really selling? If so, then the back test will fail. But we surge up to the back test, probably not that surprising for most moving average traders, but then we pop it with strength. So then it's like, okay, trend's still on. Next time we tap it, we would expect it to catch. And I'll be honest, this stick is scary here. This big red one straight through it, that one probably got a lot of people. I don't personally remember it myself, but I'm sure it would have got me too. But big picture, we quickly reclaim this, and then we're back off to the races riding our short-term moving averages. So let's talk about those short-term ones, because I think they're really important, especially for a lot of you day traders out there. So when you're on a daily chart like this and you are in the midst of a big run, let's use this as an example, off the 200 here. So we transacted the high time frame and we pushed up. We reclaimed the 50, we consolidated, we pushed up. So it's hard to buy. Let's zoom in. If you're a bull and you missed the scalp up, or you miss these gap ups, it's hard to just buy at the top of this stick, right? We're kind of just floating in no man's land. It's really extended. So what do you want to do? You want to see these short-term moving averages. This is a 21 moving average, the yellow, and a 9 moving average, the blue there. You want to see these catch up, and then they'll provide support for you to trade off of. So this way, you can minimize your risk. You can put a stop and say, okay, if we close a daily candle under this moving average, then the momentum, the immediate momentum trade is off, and you can start looking for the 21 and probably the 5 or the 50. And this is all dependent on how strong the trend is, right? So every chart's different. We're looking at SPY, the strongest of the strong. But I just wanted to use this as an example because say you're a mega bull up here, but you can't really justify buying a big gap up. Sure, it would have worked out, right? But we can really minimize our risk by saying, okay, we're trading tight in here. I'm waiting for this moving average to catch up. Once it taps and shows any sign of buying, that's my entry. So you could have maybe front ran it a little bit here, but more realistically, you get 1, 2, 3 days right here to buy, right into it. And you can say, okay, if we keep going and close a candle under, I'll just wait. I'll just take a small stop and I'll wait. But in general, you would expect this to hold and keep guiding us up. So you can get some really clean trades off of that, right? Same thing here. Okay, we did lose the 9, and that's totally fine. That's a very short-term EMA, right? That would be a very aggressive trend up. So this 21 is a real good sweet spot. And I'm using a daily chart, but we'll pull it up on intraday charts too, because this works on all time frames. The general ideas are what matters here. The high time frame moving averages, they are major support. The shorter the time frame, the less major the support. But in general, when you're on a trend up, you're looking for these 21 EMAs, these 9 EMAs to start acting as support and showing that there are buyers willing to keep boosting the stock up, essentially. So the 21 here is probably my favorite. If I only had room for 2 moving averages, it would be the 200 and this 21. I love the 21, and I buy a lot of pullbacks off of it, especially on these power stocks, these momentum stocks. Hood is another great example of how I use this. So off of this break here, I was just a buyer off of the 21 pretty consistently here. I remember buying on here. I'm not sure if I bought the 50. I sure wish I did. I think I probably bought the reclaim here when it gapped above. But I know I was in this trade here, and then I knew my time to get out was when it lost this 9 EMA, just because it was so strong above it. And then I said, okay, we're going to chop here a bit. If we're losing this, we're probably trading sideways. And that did pan out pretty well. And I then, full disclosure, I missed this next leg of the trade, but here it is a pretty clear entry for me where, okay, we're basically fighting for this 21 while the 50 is catching up. So whenever we reclaim the 21, it would have been a good time to buy, either right here, then it would have came back and given you a second entry, or this would have been another good entry where we were posting bottom wicks into these moving averages, and then we closed a candle above the yellow, kind of signifying, okay, this is a consolidation here, and this is a catch of that consolidation, and we're ready to kind of continue that trend. So then say you were in here, you'd just be riding it up until this broke. This didn't break, you're still in. This would have been scary, but if you're waiting for daily candles to close, like a good swing trader does, you would have just kept being in until we were way overextended here. And if you've been riding a moving average trend line like this, and then you get a big gap up, probably a pretty good time to take some off the table. Because what do we think it's going to do? We think it's going to come right back and retest that rising moving average. If it holds, then you can get back in. If it doesn't, you've secured a good entry or a good exit, and you have a cushion for when you do try to decide to play continuation, if you do. So here we're just under the moving averages, and we're looking for a higher time frame to catch. So this 50-day here, it tried, but see, it wasn't quite ready. We were posting top wicks into it. So then you wait for the next long-term entry off that 200-day moving average there. So this is kind of how I use them on a daily chart. We can pop into an intraday chart, and I think SPY will give us a great example of some trend following stuff we can look at there. So on this 15-minute, we see the 15-minute 200 providing nice support yesterday, and that definitely looked like it was a pretty big juice zone here. And hey, Stuart, good to see you here, man. Let's pop your question up here. Hey, Steve, I haven't used the 21 before. I used the 20. Is there much of a difference? One. That's the difference. Not to be too facetious, but yeah. So whenever there's a number on the moving average, let's talk about what that actually means. When you have a 21 moving average, it is looking back 21 units of time. So if it's on a weekly chart, it'll be pulling the last 21 weeks of data. If it's on the 5-minute chart, it'll be pulling the last 21 5-minute increments. And so it gives you a rolling average of the price action in that time. So it can help gauge the strength on that time frame. So that's kind of the methodology behind why short-term moving averages, they are more about the immediate momentum trend, because they're tracking the past, shorter frame of momentum where it's starting to curl up and push out of that base or whatever. And so that kind of the idea is that each of these lines represents a different cohort of traders, a different kind of basket of traders. And these shorter term ones, they represent the guys who are just riding momentum. So while those guys are above that moving average, they're green in their momentum trade. The average trader in the past 21 days is doing well, and they're able to kind of continue that momentum. And, on the other side, for the long-term moving averages, that represents a much longer term time horizon for traders. So if you got in on the last 200-day moving average, price ripped up and then, casually eventually drifted down like it did on Hood. Let's pull that back up once more. It's a good example. So if you were long off of this crime tap here, this knife under close above, you have a cost basis of, say you got in right when it reclaimed, $15.89. Now all the way back, this is your first chance to reload. Most of these guys are long-term investors, and they've probably been taking profits, after it's extended too far. And we'll talk about an indicator to determine what is too far of an extension too. But in general, so they're not really looking to sell here. They're looking to reload. They're really looking to buy more. They're still up 100% on their trade from 1580 something up to here, 109%. So that's where you can really see that if you're patient, these long-term ones, they represent really sturdy levels of buying and really, really robust cohorts of the market where they're bulls. They're long-term bulls. They get in when it's cheap and they keep riding it. So yeah, as OTP says, there is a difference of one, Stu. Absolutely. So in general, there's not a big difference between a 20 and a 21. What I would like to focus on is a lot of people use the simple moving averages for their short term. And I like the EMAs. So the EMAs, they're just a little bit more reactive. They're a little bit more sensitive to price movement within that time period. I won't get it too much into the nuts and bolts of the actual formulas, but in general, you like the EMAs for short-term stuff that you want to be more reactive, and you like the SMAs for longer-term stuff where it's just more of a hard line level of support, I guess you could say. So we have those, and I'm going to pop intraday here, and we're going to talk about one other thing that this indicator suite provides that I think is really useful, and that's this light purple line here, and this is my VWAP. So any of you intraday traders, I hope you have VWAP on your charts. If not, put it on. I'm telling you, that's the number one takeaway from this whole seminar. VWAP is incredibly important, and it stands for volume weighted average price. So all of these indicators we've been talking about, these moving averages, they are all a moving average in the same way, but they're different because they're not affected by the volume. So we started this whole thing talking about how important volume is, and this indicator essentially combines the volume with the traditional moving average and gives you, on whatever time frame, a really good representation of basically what the average participant in the stock is feeling. So if we are trading over VWAP, the average person in the market in the stock that day is green. They're doing well. So on these momentum plays, on these big, let's see, bull, I think would be a good example. On these big crazy swings, let's go back to the crazy pump. Here we go. So this was a big, crazy multi-day pump. And as you can see at the bottom here, it started when we surged through VWAP, this purple line here, and continued on the open the next day. We gapped up big, and the volume was, it was mostly trading pre-market here. So we undercut it for a little bit, But what did we catch on? We caught on our short-term momentum moving averages that were sweeping up, providing support, and we surged through VWAP. So since the beginning of the day, even though we're up massively, up 200%, but this VWAP helped show that though the trade is very much still on, we still have a lot of room because the average traders who are just getting in, even this morning, they're already starting to show profit. So this helps give confidence that, okay, I'm going to be in this rocket ship until we lose that VWAP, because that would show what? If we lose the VWAP, the cohort of traders represented by it is net red. When you're net red on a high momentum stock like this, you have the potential to have a 80% down move after a 200% up move, right? So it's very important to watch this, because a lot of momentum traders, they'll just get out if they lose VWAP. And as long as VWAP holds, they'll keep trading it. So as you can see, intraday here, we back test it once and show a strong candle off of it. We back test it twice to the penny, strong candle off of it. And the next morning, it tries to hold above and then posts a candle below. So short-term traders are probably saying, okay, the immediate chase is off. And it does back test and drift down more, back testing this volume shelf. And now, since we have a range, we have a nice volume shelf or volume profile to work off of here. I'm just trying to kind of integrate what we have so far before we push forward. So big volume shelf here. We would expect, we're trading under it, and we have a big volume shelf above. We would expect a back test at least. And if we can reclaim this, the party's on. If not, then we'll keep guiding down with VWAP and would keep looking to short. So it back tests and rejects. So that's a pretty big sign, right? So now we have a big volume profile shelf that's gotten rejected. So now we just got to keep watching that VWAP. And overnight, you see it bonks its head off. And then all day long, it's trading under VWAP. See how once we lose the VWAP, it's just a slide, just a big slide down. And same story, tries to pop it, loses it, just coasting down, all the way down, all the way down, all the way down to 14 bucks, right? So that's a good example of why VWAP's really important on these momentum names. And let's look at one more. I know some of you guys were trading KIDZ. And if we pop to a 10-minute chart, we can watch the same thing happen here. So big gap up, and our short-term moving averages, the yellow and blue, they're acting very supportive. Right off the open, VWAP, our purple, catches. All right, show's on, boys. Time to rip it. They rip it, they rip it. We're overextended. Where are we going? We're going back to our 9 and our 21 moving average. And I just popped on a 10-minute chart. This is what I like to trade with. I know a lot of people do 15 minutes, and it'll be slightly different, but it's all the same idea, right? You know, you see how, okay, here we have a pretty clean one right here. But you notice the VWAP doesn't change. It's always in the same place. So that's important to note. But in general, you know, it doesn't matter if you're using a 5-minute chart. We will see these on all of them in one way or another. So here it was pretty responsive to this blue, this 9 moving average all the way up on the 5. And then you could have, you know, cut your scalp here and then waited for it to reclaim something, maybe retest VWAP, maybe reclaim something else. I'm going to give you a few time frames here to just kind of give you a picture. So on the 15, if you're intraday trading on the 15, that's probably a little bit long, but still totally fine. I know a lot of people who do that. And then you're probably going to rely more on this 9 moving average and maybe not expect it to transact the yellow. Whereas if you're trading on the 5, then you can look for that yellow to be tested and reclaimed. So right around here would be a good place to get in when it undercuts and then reclaims and then shows a power candle. Then you back test. That's probably a little safer there. But again, the same basic story, right? These 2 short-term moving averages, they are our guides on these momentum plays along with VWAP. So we have talked about some moving averages here. We have talked about some volume indicators here. I want to get a little bit more granular, give you a little bit of my secret sauce here, give you a little bit of what I use every day that I think is really useful, and it kind of is not as widely accessible, because all the stuff we've talked about, you might have heard it before. I wanted to go over it, but there's more to it than that. So what I want to talk about is a very specific moving average that I have on all of my time frames, and it really, really helps with gauging momentum intraday, and it kind of consolidates all of the things we've been talking about into a neat little package system. So for me, I have whipped up this indicator myself because I was having trouble finding something super accurate. I bet that there's something now, but what we're looking for here is a moving average, or is an indicator that essentially tracks one moving average on all time frames, but projects them onto one single chart. So I'm going to take my other moving averages off to give a little bit of a clearer picture here. And we will go to SPY. And hide my drawings. There we go. So this is a 27 EMA on all time frames projected onto one chart. Let me explain that and post some labels here. There we go. So remember I was talking about how the 200 week or 200 month trigger is really long-term support? This is the same kind of concept, but instead of using that 200, we're using a 27 EMA. And I don't know exactly, I see some questions, I'll get to those in just a sec. I don't know exactly why the 27 is so in particular responsive. I have a theory that a lot of shops, a lot of like quant trading desks and stuff use a 30 moving average roughly for a 30 EMA for rough trend following, in a sense that if on a given time frame you are above the 30 EMA, then you are essentially mathematically good to go up into the next major 30 moving average on the next time frame up. So using this, we can kind of trade level to level, and we'll always have it on our chart here. So what you can do is, this is what I did. I just asked ChatGPT to code up an indicator that takes a 27 EMA on every single time frame. Well, I did 1, 5, 30, 1 hour, 1 day, 1 week, and 1 month. And then you want the indicator to give you all of those on any chart or on any time frame you have open. So it was pretty painless for me to do that. If anybody would like my actual code, you can hit me up on Discord, and I'd be happy to share that with you. But in general, the idea behind this is it gives us a one-stop shop indicator for a whole system where you can say, okay, I'm buying off the low here, off the 1 month, and I would expect it to trade up to the 1 day. So you get really clean trades here. Or you can say, okay, we are now, here's the weekly here, this purple. When we're consolidating into it and we lose it, we say, okay, we are now likely to test something down. Maybe it gets down here. I wouldn't necessarily say 100%, but in general, we're looking for the next major trigger down. And this does work really nicely. But what you can use for confluence is you can say, okay, we're coming down, we're coming back up. I would expect this blue daily to act as resistance if the thesis is correct, right? So we lost the weekly, we should be due for the monthly. If that thesis is correct, when we re-encounter the daily, we would reject that, because if the weekly buyers aren't ready, then the daily buyers definitely aren't ready. Does that kind of make sense? So each one has more weight the lower time or the higher time frame they are, because those represent those big cohorts of institutional buyers that are just big buy the dip guys once it gets to their level, and then they provide the support to the market. So we lost the weekly. Now we backtest the daily, we reject that, and our goal is this monthly trigger. So if anybody was following me in my work when we were at this capitulation level, they'd know that I was getting out of my shorts heavily under 500 because I knew that we were overextended to the downside. And that's when I started building long positions as well. And I started taking those long positions off quite early, as you can see, but I started taking them off into the daily in case we were in this type of situation where we rejected again. In this consolidation back above the daily, I started nibbling positions back long because it seemed like, okay, maybe this is a trend change, right? So that's kind of how I use this in general, but we can talk about it intraday as well, because I think it's super cool. So when you use these triggers intraday, you get a lot more granularity and you get a lot more actionability because you have 4 triggers to kind of work off of. So in general, let's use this day as an example. This was when we were talking about, okay, we flipped the daily trigger. So now we back tested it. Okay, this is great. So we reclaim the daily trigger. We have buyers on the daily trigger. What's next? We look for the next trigger up, the hourly trigger, right? So the hourly is the green here. And so if you're a buyer here, you'd say, okay, I bet that I can scalp it to this green trigger, and then I'll watch and see if the hourly buyers are ready to go too. So that is pretty clean here. We get the daily reclaim, we take a scalp here, and then we watch. And as we're watching our even shorter term triggers. This is a 5 minute, this orange, and the 1 minute, this red. We see, okay, the daily reclaimed. And then we have this little thing here where we basically butt up against the short term. And then we say, no, we are cooking it, right? And so the same thing that you can do with moving averages, since these are moving averages, you can do here. You can play crossovers. So when you have a shorter term moving average crossing over a longer term moving average, you get a nice acceleration usually of that trend. And it's basically a confirmation signal, which says, okay, the newer buyer or the newer people on this stock, on this chart, they want to buy because the moving average that's shorter term that tracks a closer number of days behind it, they are showing strength when compared to the midterm one. So does that kind of make sense? The people who have been buying and essentially kind of working off of that 9 minute EMA, for example, they're showing more strength than on the 21 EMA. So the buyers in the past nine intervals are stronger than the buyers of the past 21. That shows the trend is reversing, right? So because of this gives us confidence that, okay, we are good to test the hourly, and we're probably going to go higher. And so as you can see, you would be getting buy opportunities under where they wick up off of this 5 minute. So I love these kind of trades because then, okay, we take the quick scalp and now we're going to look and see, okay, if we can reclaim the hourly, we're going to be able to ride our 5 minute just up into the moon until we get to a major target. So in the same way that we were talking about, what was it? It was, okay, yeah, trading off of like a 200-day moving average or a 50-day moving average. And then when we reclaim the 21 or the 9, we can ride those up. It's the same kind of concept here, right? And as you can see, it worked very well. Anybody who took this overnight. And so then we just keep referring to the system. Okay, we are up here and we're probably running a little hot, right? So where would we expect to find support? We would expect to find it off of that hourly trigger again. The hourly triggers are super important. And we knife down to it. We consolidate over in after hours. And then we continue pushing. So say you held the trade, or say you got in long, that'd be even better. You got in after hours when you saw consolidation into the hourly, and your bias is that it holds and pushes up. Great. You're already cooking in pre-market. What are you watching pre-market? You're watching these shorter term triggers to provide support. They do. Beautiful. Maybe you add, maybe you just hold, and you target this big purple because that's our weekly trigger, right? So now this is the big pivotal moment. And as you can see, we chop around it a bit. I was shorting off of this multiple times in this area. And I wish I just stuck long, but that was what I was looking at. Okay, it looks like we got some new people in here. Let's go back through the comments real quick. OTP, will you share which volume profile indicator author of public use? Absolutely. So this is VRVP. Visible range volume profile. It looks like it's actually a default indicator on TradingView. So no particular person made this. I guess just somebody working for the company themselves. And really quickly, in case you missed it, I'll go over the other ones too. I'm using OM multi-indicator by David Hamilton. And that gives us, let me turn that back on. And I'll turn my triggers off. So that gives us a VWAP. It gives us up to 3 EMAs and 3 SMAs in one indicator. And I believe it also gives Bollinger Bands too. So we can, it actually has a ton of options. You can do Bollinger Bands. Looks like I have my settings weird. You have the option to do different Bollinger Bands, which are great. They provide you some targets intraday to kind of shoot for so you kind of know when things are overextended on a given time frame. they give you, okay, nice, somebody updated the code. You can now have 4, oh no, never mind, it's still 3 EMAs and 3 SMAs. And you could do some fun things like EMA fills for crossovers. Personally, I don't use them, but it's just nice to have the options. And most importantly, this one gives you VWAP as well. Oh, also morning high, morning low, afternoon high, and afternoon low, if you like those session indicators. Personally, it's a bit too much for me. So I just have these ones because I can have all of those just tied to one indicator, which is good to go. And yeah, it's a good little piece of code there. So we have those. Those are great. Now I would like to talk about, let's do cam pivots and see if they appear on my chart. So we've talked about when to get into trades for the most part, right? And when to get out if they're not working, if they lose a moving average, if they stop with the momentum. But I want to talk about where we can target in terms of extensions, right? And actually, I think I'm going to use a different one for that. So this is one that I really like. It's the SATY ATR, SATY ATR levels. And this gives us a ton of information. So just for the sake of clarity, I'm going to turn my other one off real quick and just leave you with what we have here. So what are we talking about here? We're talking about an indicator which essentially will help us know where we can target on charts. And I think that one tool that's really good for this is ATR. This is called average true range. So when you get when you're on average true range, you're basically saying that, okay, based on the price movement of the stock in the past, this is how much we can project one candle to move on any given day. So if you're in a stock, you think it's bullish, this helps you pinpoint, okay, mathematically, this is a level where it's likely to go. And if it goes much above that, it's probably overbought. And if it doesn't go above that, if it just pushes up a little, maybe you have more room the next day. Let's see. Stuart says, this looks very handy. I keep using an ATR calculator at times. Absolutely. Yeah. So I love this indicator. This guy's, he's also very active on Twitter. Give him a follow if you want. He's a really, really smart guy. But his little table here is great because it gives you the daily range of $6. So this is what we've done today. The daily range is of $6, and that is 50% of the ATR of $12. And then this isn't gospel, but in general, these do work where if we're over 567, we're looking for calls. And one ATR of that 567 level is 576. So say we backtest 567 and hold and you get calls, this would be a 1 to ATR target for you. Just nice and clean. So then, because Stuart, you're talking about using calculators throughout the day and stuff. I'm a big proponent of loading your RAM, so to speak, like your read-only memory, like loading things that you can in advance. So then when it's time to make the trade, you don't have to sit there and calculate things out. You don't have to calculate your buying power or your, all this kind of stuff, which really interrupts the flow state, And so for me, it's about doing all the prerequisite work we can so that when it's time to take a trade, we have as few points of friction as possible. So you can just get in there, make your money, get out. Yeah, absolutely. I'm with you. Let's see. Tyler, good to see you here, man. You are not we started a little earlier, but you'll get the VOD. If you have any questions, just hop right on in. And yeah, absolutely. I think everybody did have a good day. It was quite a heater. My swings are happy. I sure wish I bought some options or something on Friday, but hey, we got a good week ahead of us. Hopefully a little pullback and then we can push up. Okay, so ATR here. Let's go back to here and see if we can make sense of this a little more. So we have these different levels here as well. And I believe these are calculated off of Camarilla pivots. So that's another one that you can use. Maybe you're, for whatever reason, not a fan of this and you do like Camarilla pivots. These are all systems which basically use ATR to project levels above and below, right? So we have the entry that we can get off of these, moving averages, these volume shelves, these areas of interest. and then we look for extensions until it's mathematically overbought, and then we get out, and then we very likely will get back in the next day, right? If we're actively trading this stuff, especially options traders. So if we just scroll back, we will see that these levels are decently well respected. So for example, this was our blue level on this day, and then overnight it drops down to it, but it does hold until it doesn't. Okay, maybe it wasn't the best example, but then it's kind of responsive. They're very often responsive to these kind of mathematical levels. So I think this is a good one, and we'll pop on Camarilla Pivots as well, and I can show you that. This is a good one by Pratik for Clover. And let's get on. What didn't moon today? What would be a better example? Let me find something that didn't rip like crazy. Real estate. There we go. So in general, this will give us a pivot. The green here is that's our pivot. That's what we're watching for directionality. If we see volume through a pivot in one direction or another, we would expect to see the next level kind of transact. So the R3 and the R4 are the most common, but we're going to add 5 and 6 as well. So in general, for these day trades, you're looking to get in off of a pivot, and you're going to get out at the R3 and R4, just because that's often what the clean moves will be. And then if you have a big trend, then you can be looking for the R5 and R6. So let's pull up SPY and see how far we got. My indicator's messed up for some reason here. Wonder why that is. I won't waste your time. We will use a non-mooning chart just for a better example. So yeah, in general, you'll be targeting the 3 and the 4. And then if you get a really strong move, you're looking for those 5s and the 6s. But these are all just going to be kind of, remember, these are just like statistical likelihood things. So there might be a very specific level that's above a certain, pivot or a certain cam level that it wants to reach for to maybe fill a volume imbalance or to tag a major moving average. And maybe you could get a statistical outlier where it outperforms to reach for one of those major targets. And the logic behind that would be, well, if there's a lot of resting orders at that moving average or at that, that gap in the chart or for whatever else, the market makers and the market as a whole has an incentive to kind of push it back to that level and renegotiate that area. So just something to consider. These aren't the Bible. They're not, they're not gospel. They won't always work every time perfectly. But the whole idea is that we are essentially giving some ideas and helping inform ourselves about where a move will go if we're already in it. Yeah, exactly. Great position. Great for positioning stop losses. Absolutely. So the same thing here. You can say, okay, if we lose the S4, we're probably in a trend day down or something, So there's a couple things to kind of have you just consider for options for indicators here. But in general, I think that I'll just recap the ones that I think are really, really crucial. We have our, sorry, I'm getting pinged here. We have our volume profile, variable range volume profile. I can't live without this, and I can't live without my volume. I cannot live without this 200-day moving average and my short-term moving averages. For me, it's a 9 and a 21 EMA. And I like these two because you can also use these just like you would on an oscillator. We'll also talk about those in a sec. Just like you would on an oscillator, you can use these for crossovers and to gauge momentum. So for example, right here on XLP, for example, just because we're on here, this is a pretty clear example of, okay, we test it once, twice, 3 times, and we're not really able to get much traction off of that. And then we close a candle below it. So now it's like, okay, and we'll see the crossover happening then too. So now we kind of have to wait for this blue to get back above the yellow before we can highly confidently take a long. So in this whole consolidation, still the same thing, just curling under these moving averages. I'll zoom in a little bit here for you. Curling under, not able to close anything meaningful above, and the blue is still below the yellow. This whole time, we don't get the crossover till this day here, this gap up. So personally, here, this is a really good example. Personally, I don't trade crossovers so much as I trade the anticipation of crossovers, because on this day, it was pretty clear we were going to get a crossover soon, right? Because it was a power stick. I care more about candles closing through moving averages, if that makes sense. So for me, this is the long signal because we closed through both of them. And I know that this move will very quickly cause this blue to cross over the yellow. But if you're a crossover trader, then you would just get long it open right here, and that would still be a fine trade, right? So, and then, hey, look, same thing right here. When you could wait for the crossover to happen on this candle here. But for me, this was the sell signal because we got a candle close through the yellow. So that's how I trade moving averages. That's, just giving you a few different options here. Some people love the crossovers. I like the crossovers for trend or for trade confirmation. So let's find a example of that. On a 15-minute chart or 10-minute chart. Let's see here. So you wait for the candle formation as confirmation after the crossover. So the candle formation should, well, let me make sure I'm understanding right. So in terms of the candle formation into moving averages, I think it's important to see where it closes. I think that that's what really matters. You can have a lot of noise above and below that's kind of irrelevant in the big picture. What really matters is if it closes above it or below it, right? And then if you get that close above or below, then you'll very often see the crossover happen to kind of confirm that move, if that makes sense. So here's intraday SPY. And say you're like, okay, I missed the gap up, but I want to get a piece long. What am I going to be looking for? We're actually going to go 5 minutes here. Okay, so I'm going to take a little bit of the clutter off, and we're going to do it with both systems here. So here's my trigger system. This is all 27 EMAs. And I should clarify this. I didn't invent this all on my own or anything. You know, there are a couple traders that I know that use something similar, and I watched them and learned so much from them, and I decided to start using it too, and made a few tweaks. But in general, it's not too hidden tech, right? It's a moving average on a bunch of different time frames on one screen. Many people have definitely done that before. So we're showing in pre-market. So first we have that power up, right? And the first thing you want to say is, okay, if you're long, you stay long until the 1 minute trigger gives out at the very least. So personally, for me, I would be considering getting out here, but then we catch and go up, and then we close above here. So for a really short-term scalp, I say, hey, I made my money. I'm going to wait and see what happens here. But in general, you can be looking for 5 minute back tests to get back long as those hold. So maybe you buy this, maybe you sell up at the 1 minute or something, and you just kind of wait and see what happens at open. So at open, we knife both of them. So probably that's a good indicator that we're not going to just rip straight up out of the gates at open. We would have to have a big wick up or something. So we're probably saying, okay, we had expansion. Now we're going to consolidate a little. We're still biased bullish. So we're looking to buy consolidation once it gives us a sign. So we push down once, we bop up, we test the 5 minute trigger, and we reject that. So we're not ready yet. We come up again, we reject it again. We're not ready yet. But what we can see, the difference between this move and this move is the sellers couldn't push us down as much this time, right? Now they're seeing some buyers coming in off this red 1 minute trigger. So we're just keeping an eye on that. And as soon as we get a clean candle break and a follow through candle, so that's another thing. You can get false signals if you just wait for one candle. So depending on the situation, but in general, I will be waiting for one candle through and then a push through the top of that candle. So let's see where we find that. See, here's one candle through, but the next candle rejects, right? It couldn't break above the high and just instantly bops down. Here's another candle through, but it couldn't break the red here or the orange. And then it's just, no follow through. So nothing here. Tries to break through. This candle couldn't follow through. This one tries to break through, succeeds. and then immediately expands up the top. So I would be a buyer somewhere in this candle. I actually didn't trade today, so I missed this trade. But in retrospect, pretty easy here. We get our close through, and we get the push through there. So now this is if you're waiting for the 5 minute to flip, you can buy it off the one here. But if you're waiting for the 5 minute to flip, we have a few things to watch for here. This is a testing candle. It's always good when we close the candle right up into a level that we want to see break. And then the next candle, we want to see an incentive to break higher. So this did give us that. It looks like it pushed down first and held above the 1 minute. That's a good sign. And then it closed above the 5. So that would be a valid entry, or you could wait for another one too. So this next candle, it might be a little weird in the moment, but in general, in retrospect, what we see is it pushes down and it finds support at the 1 minute rising trigger. And then it shows an incentive to push higher, even though it closes flat again into the 5 minute. So what are we kind of seeing here? We're seeing the support, this red line, rise up and get ready to cross over momentum, right? So we're seeing the shorter term buyers step in, essentially, compared to these midterm buyers on the yellow or orange trigger. So because of that, if this wasn't your buy candle in here, this is a power stick right through. And what can you do? You can, if you miss it and you don't want to chase this, what do? We're through the level that we want to see flip. It should back test and give you another entry and go long. So these are where you get the really, really tight risk reward trades where you're not risking too much and you get to catch really nice expansions. So for a scalp, if I wasn't in here, which I probably would be, I would definitely be in on this back test right here, because now we have power candles through. This high volume red, it couldn't push down, right? So it's basically saying, okay, we came down. If this was high volume red, we'd expect to stick, somewhere down here or something. But instead, it was just a battle, and it's just a kinetic energy kind of building. So this is a really clean entry here, the back test right off of the crossover. So you have the 1 minute crossing over. You can say, all right, I'm expecting this to transact right around here. As long as it does and doesn't lose this candle down here, we are cooking, and we should be able to get a nice move up. And so you can risk just a tiny amount. Let's put it on here. Say you're getting in off that 1 minute bar right there. And you can say, I don't want to lose this bar right here. So risking 41 cents on the trade, and your target would be high a day, I'd say. So that's 5.8 risk reward there, just on a little scalp. In general, it's hard to find scalps with big risk rewards like this. Usually you're looking at like 3-to-1 tops. So when you're able to use a system like this to really pinpoint, I think it's very, very useful. So yeah, you're in the trade until it loses the 5 ideally. And you could say the 1, but in general, don't worry too much if this one candle closes a little bit below, because remember, we got the rising 5 here coming up for support. So you would expect it to be relatively stable until the rising support comes and like the cavalry arrives, right? And we can see right at the end of the day, we do have a little yeehaw where it crosses over briefly. But again, here's another thing. At the end of the day, you'll often see kind of some relatively big positioning changes happening. So leveraged ETFs, for example, they need to rebalance. The market as a whole needs to rebalance. And that happens, generally, you'll see the effects of that in the last 10 to 20 minutes, especially that last 10-minute MOC candle. So yeah, so this was just a little shakeout. Often when you see a hollowing out of a range, so we have the bottom, we have the top of a range, and we're near the top, and then it hollows out towards the end of the day. Very often that's a sign that they're just pushing it down a little bit to get an entry that isn't super extended to go long again for continuation. So, I mean, this looks amazing for continuation already. But yeah, and then you could have gotten long here over another crossover, right? So just an example there. Now let's try it with the regular moving averages. So here we have our 21 and our 9. We're coming down. We're still trading under this 9 moving average, and then power candle through both. So now you can say, okay, we got the close. As long as we hold the 9-minute, I'm a buyer there. So you could really pinpoint it right there too, off that 9 EMA, and then you're off to the races. Now you're up through VWAP. That's another great sign. And now you have the crossover here as well. So this is kind of like all full steam ahead. Everything's kind of working, right? So yeah, just showing you that you can use multiple systems to kind of infer similar setups here. And I wish my Camarilla pivots were working on here. Let's try these SATY ones, see if those will work for us. I think that TradingView might have changed some stuff overnight and messed up some indicators and stuff, because they definitely changed. I had to upgrade my subscription to get intraday charts. I was none too pleased, but there might be something going on there. No, they're all tracking like yesterday's price, which I guess could be because it's that severe of a gap up that we're just over all of the ATR levels, which kind of would make sense, I suppose. How far up are we? Wow, yeah, okay. I didn't realize it was a full 3%. So that'll probably do it. Anyways, these are some of the most core indicators that I use. I will go over a few more, just because it seems like I still have some people here watching. So hey, why not? If anybody has any questions, this is a great time to start asking them so that I can, get to those and talk about what you guys want to talk about. Really quickly, I will pop up a few more though. So I think anchored VWAPs are very useful to talk about too, especially on daily time frames. Let's clear this up a little. So an anchored VWAP, we talked about VWAPs. An anchored VWAP is the exact same thing, but you're anchoring it to one specific date. So for example, we can anchor it to the low, which was Monday the 7th. What was it? April? Yeah. Switch to an hourly. Maybe we can see it there. Trying to figure out why it won't display. We should have a nice moving average from the bottom here. Huh. Okay, the joys of live production here. There it is. Okay. And did it just disappear? There we go. Okay. Now give it to me on the daily. Still will not appear on the daily. Interesting. Okay, we'll go back to the hourly. Anyways, what we are looking at here, I'll cover the other things, is this aqua line. So this aqua line is basically tied to this point down here. And I was trying to get it to be tied to the exact bottom because it's really clean. When you do that, you'll see that it tags right off of here and then pushes up. But in general, what we're looking at for these anchored VWAPs is we are identifying a cohort of the market from a specific time point or a specific event. So for this, we're using the bottom here just because, okay, we're looking at the strength of new people into the market trying to catch us. So that gives us a baseline where, in the same way when we were looking at that Webull chart, we were looking at, okay, as long as this is a momentum trade and as long as we're over VWAP, we know the average participant is in the green and they're willing to stay in the trade. If that starts to reverse, if we start closing candles under VWAP, we could see a cascade where we lose all that momentum as all of the momentum traders bail and say, hey, trade's off. So in the same way for SPY capitulation events, any kind of capitulation candles, we have the big push up, and then we want to see buyers come back in off of that anchored VWAP and basically say, okay, maybe we missed the bottom, but or maybe we're in from the bottom, but we're going to be adding to our position as long as this new cohort of buyers are indeed buyers and they are indeed trying to push the price up. So you can see that it works pretty well here. We got a nice clean tap and push, and this undercut was pretty tricky, but quickly recaught it after one day, back tested it and pushed off. So now that we're really extended, I think it's fair game to say, hey, when are we due for another retest? It might be a while, but just something to kind of keep in mind. I like these anchored VWAPs from specific data points like FOMC or the tariff day announcement, the Liberation Day, that whole thing. They're very responsive in that regard. And one other thing you can do is you can do a 1-day anchored VWAP and a 2-day anchored VWAP. So the average price for the past 1 day versus the past 2 day, and you can trade in between those two levels. That's a cool algorithmic thing that I've seen our very own Michael Noss do a bunch. He's a very, very effective trader using that quite simple strategy. So that's a fun thing you can do. Let's pop that off, and I want to talk about a few more. Never save this many indicators, folks. You'll go crazy looking through them all. Why not just RSI? Keep it simple. So RSI, MACD, MFI, all of these are essentially oscillator indicators, right? So they go on the bottom of your screen here, and they essentially kind of help gauge or track for divergences. And divergences are there's a decent amount of nuance to them, but in general, you're trying to kind of gauge when the market is kind of due for a snapback. So you can look and see when we are over 70. Very often we're overbought and we need to pull back to this midline area and probably to the other kind of side of the value area. And you can see when we're under that 30, it's often a time to buy. Not always, but often. So what you're looking for is essentially ways to identify when things are particularly overbought. So I don't use these a ton, to be honest. I find that they just don't really fit into my trading style personally. So I will refer to them, but unless somebody's like, hey, check out this divergence, often I won't really have them on my screen. I just wanted to kind of to give you a just one more option, because I think that these are great. And I think what I use a little bit more often is MACD, because that gives me a little bit more information. So with MACD, you get these oscillators, right? It's kind of like our moving averages, the 9 and the 21. And they're just another way to kind of help visualize these peaks and valleys of the stock. All right. I think there's one other that I wanted to talk about. I will not get into Ichimoku clouds with you, but we could talk about, how about some Bollinger Bands or linear regression bands? I think those are good. So any kind of bands like this are a way of kind of visualizing a similar thing about overbought or oversold. And they are really useful for me because they can help me kind of, as a swing trader, they can kind of help me position in a long stock that I want to be long in, but without kind of overpaying. Yeah, Bollinger Bands, absolutely. So right now I have linear regression bands up, which are slightly different, and I'll talk about the differences, but in general, they're used interchangeably. So a Bollinger Band is going to be slightly more responsive based on the formula they use to small price movements. So I will pop a Bollinger Band on and we can compare the two. All right. So here's Bollinger Bands. And here's linear regression bands. So what you can notice is the Bollinger Bands, they are wider, or sorry, the linear regression bands stay wider, while the Bollinger Bands can tend to contract more, right? So there are two different kind of trading strategies I use with these types, and that's why I have both. I'll start with the more simple one. So for linear regression bands, it is a little more standardized and it can be a little more reliable. So for example, whenever we are in this top band over this kind of this deeper blue section, which is kind of like the value zone. So I usually expect the value zone on either side to hold on a daily or on any time frame, but this is a daily chart. And when we're getting above that, I'm starting to look for a sell usually, or at least for consolidation in a retest of the middle area. So one interesting thing to note, the middle point on Bollinger Bands, a lot of people don't know this, is a 21 EMA. And that's why we have it on our charts, because it's very, very widely used in a lot of different indicators and a lot of different systems. So that is like our pivot point on any time frame, more or less. So how would I use these Bollinger or these linear regression bands to actually trade? Well, in general, if I'm long, let's see. Okay, say there's this big move up and I want to be a part of it, but I just can't buy when it's super overbought here. So I would be waiting for a retrace into this kind of inner band here. And let me actually turn on the middle line here. I don't think I have it on. There it is. So we are on an uptrend. I want to get in, but I can't buy in the top half of the cloud. So I wait until I get an entry, a little bit of a discount. So if anybody caught my stuff on Fibonacci ratios, Fibonacci trading, or on ICT stuff, you'll notice that I was talking about premium and discount a lot. So in any kind of price range, there's an equilibrium. There's the midpoint of any range between a high and a low. And if we expect the range that was set to continue upwards, so we have swing low, swing high, it comes down, and then we're expecting it to break even higher, then we are looking for price action under the equilibrium of the range to be acting like a beach ball underwater, right? We want to see an incentive of buying that's kind of propelling it back to fair value, the equilibrium, and a premium, right? Because if it's something that we expect there to be a demand for, we don't expect it to stay on sale for long. And when it is on sale, we want to see people snapping it up. So in that same kind of vein, instead of just having a set range, of a horizontal equilibrium, these regression bands, they give us a little bit more of a granularity to that equilibrium. So we're going up, the equilibrium is going up with us. So when we dip under it, we expect a beach ball underwater, and this would be our entry underneath. Or you could, I guess, play it on a break back above if you don't have a lot of conviction. But, in general, a strong uptrend, you buy it on the middle of the uptrend, and you keep trimming every time it gets into this upper cloud, and you keep buying every time it dips below. So we're long, we take some off, we add some back on, we take more off. We'd be looking for an add here, we wouldn't quite get it. We could maybe add here, we'd definitely add here. We'd take more off up here, and you can just keep playing this over and over and over and catch the meat of the whole move. So very useful for that in that regard. And these linear regression bands are my favorite. So the name of the indicator is REGR, linear bands, and that's by Marco Valente. I think this is just the one that I've had on my charts for a very long time. And we can look at it on different time frames to kind of give a little bit of a bigger picture here. So on the weekly, you generally don't get much moves up into this top band. So the weekly, this is a very, this money zone here is very, very well respected generally. So say you're long somewhere in here. When you spike above this blue, that's when you're like, okay, we're oversold. And I'll get right back in off of the midpoint, right? So it's a very, very clean way of doing this. I also love these on 4-hour charts. So if I'm looking long, well, we're in the top here, right? So there's not much for me to do until we, at the very least, back test the top of this zone. What you'll see sometimes on these 4-hour or hourly charts is when the trend's really strong, it'll pop up into these upper bands and it'll just kind of ride this upper band area. So maybe it bounces off here, then pushes up higher, then bounces off here and pushes back higher. Meanwhile, these bands are going like that. See what I'm kind of saying? So you're kind of in this regime until it breaks below this midpoint band. And I will share my exact settings in case the defaults are different, because I think that these are quite important levels here. Let me double check and make sure. Yeah, so the length is 23, the offset is 9. I'm pretty sure those are standard, but just in case. And then we are using these 1.662 and these 2.62 bands. And the reason we're using those levels, if anybody caught the Fibonacci seminar, you'll know that these are really important levels, especially that 1.62. So that's basically, it's kind of the golden pocket of mean reversion, where it's like in the same way that on a regular range. Let's find one here. And I'll reverse this. There. Okay. So we have this swing high to this swing low. And we have this Fibonacci sequence playing out here. Sorry, it's a little cluttered here, but I'll walk you through what we need to pay attention to. In this range, this golden pocket, this 0.62 and this 0.78, that is the area which we would like to see a pullback into before pushing up higher. So we got the down, we got the up, it tested the 50%. So it wasn't ready to break into a premium yet. So if it's not ready to break into the premium, we would expect it to come into this golden pocket where mathematically this is kind of the logical place for it to pull back before it to push up. And as you can see, it tagged very specifically off of this 7-8. So it kind of ran fibs, but it was definitely showing buyers the second it kind of got into here. So in that same way, on these bands, it's very common to see, just like you would trade from a 6.2 fib on a range to the 6.2 fib on the bottom half of that range to kind of consolidate and sweep that range. You'll do the same thing on these bands. These blue, heavy blue areas, they represent those golden pockets where there's often reversals, right? So I say I'm bullish and I get long here into this deep blue, and then I'm looking to sell up in this deep blue. And then, okay, so now I'm probably looking to start buying off of the equilibrium of a 4-hour chart. And what you can do there, see in the same way that the other systems we were talking about finding support on high levels and then honing in on smaller levels. This is the same thing, right? So we found support on a 4-hour. Now we hone in here. We had bought here and we had sold here. And now where are we looking to rebuy? When we are showing buyers underneath the equilibrium and ideally into this golden pocket here. So we couldn't quite break into it, which is kind of a sign of strength, right? It just went a little bit on sale and then they were powering it up. So maybe we missed this, but we can say, okay, next time we get to equilibrium after we hit the golden pocket, I'll buy there. So we hit equilibrium, we buy there, we can start trimming here, hit equilibrium, we can buy more, start trimming here. Now we're looking, now we get a knife through, so we can say, okay, maybe consolidation. Maybe now we wait for a deep discount again. So you could say, all right, here's a deep discount. And we can even go back to the 4-hour there. Huh. Where was it? Was it there? Something like that. Anyways, in general, remember, so we're basically using these as channels in the same way we would use a fib to kind of get ideal entries and ideal exits. SB, okay, this is a great point, and I need to figure out some software for this. It would be better if you could color increase the size of your pointer. Yeah, no, absolutely. Maybe short term, I can just turn the background on dark. Whoa. Let's see if this is way worse or better. I think I need specific software to get a highlight, because usually I can go like this and highlight it, but I see that actually just removes the cursor and you guys aren't seeing the highlighted circle. So I apologize about that. We are still, I'm still ironing out some of the details about how to best present this information. If there's anything that was not very clear because I was using a lot of here's and there's and you couldn't see my pointer, I'd be happy to go over that with more verbosity. But yeah, that'll be on the agenda this week to fix. Absolutely. In general, I'll leave you guys with some key takeaways and answer some questions as well if we have any. In general, the kind of key things for all these indicators is they help us do a few things. They help us kind of identify where we are in terms of overbought or oversold in the context of our current move, right? So it's not just as simple as saying, oh, we're too high, we're too low. It's about gauging trends changing on different time frames. So that's why you'll hear me talk about this with multiple systems, whether it's just the moving averages, talking about finding support on the high time frames, then riding the short time frames up, or whether we're talking about the triggers, which is very similar in the same kind of way. We're trading the higher time frames to the lower time frames and then continuing the move on those low time frames, or whether we're talking about these Bollinger Bands or these regression channels, where it's the same thing where the channel is moving with the trend and we are just playing the ups and downs of that channel. But either way, it's about kind of giving you some bearing points, right? To find your footing in this price action and be able to say, okay, we know where we think it's going, at least in terms of the directionality. Now the important part is to pinpoint our entries. So, I'm not a breakout trader, but I do like trading breakouts. I just buy them, they break out and I come back and I buy the back test there, and that'll be higher than the point they broke out from. So maybe I'll miss some, but it's much higher hit rate, essentially. Let's see. You are new to the stream. Have you covered triggers already? A little bit, but I'll recap them here for you as well. So this is the trigger system I use, and they are 27 EMAs on different time frames here. We have a monthly, a daily, a weekly, an hourly, a 30-minute, a 5-minute, and a 1-minute. And so the big picture, the headlines here are you treat them like moving averages. You can trade crossovers on them, all that fun stuff. But in general, we're looking for support on the 1 month, and then we're looking for it to retest the next one up, the weekly. So we can long the 1 month and sell it once we get to the weekly trigger here. In the same way, I'll just pull to a random spot to show that these just work. I mean, pretty easy in these uptrends, right? But you have a rising weekly here and a falling 1 day. So we are watching this crossover, and more importantly, we're watching, well, it didn't even get a back test. Ideally, we would like to see a back test off the cluster. But in general, so we're looking for clusters of triggers to trade off of. We're looking for triggers crossing over. So for example, the daily here, it did briefly cross over, but it was just kind of, you'll see this a lot on regular moving averages too, where it does a little fake crossover and then reclaims, and then that's a really strong buy indicator. So when it crossed over here, just one last shakeout and then just big candles up. So we're looking for crossovers. We're looking for level to level trading here. So if you are long here, now you're just riding the 1 hour up, and you just keep on as long as the 1 hour is holding relatively strongly. You can just stay in. And then once the 1 hour shows weakness like that would be a sell indicator for me. And sure, we did come back a little bit higher, but in general, we were entering some chop, and I'd be waiting for this daily trigger right here. And this would have been an excellent long. So then you get long there, and now we're back up to riding the short-term hourly triggers. And didn't quite get back this time. But in general, you can kind of see where, okay, we're in from the daily. We're riding these short ones up. When the short ones lose momentum, then we're going to reevaluate until we reconfirm on a higher time frame. Pretty relatively basic stuff, but the whole idea is that it's very easy to encapsulate this into an actionable trading system. And for reference, let's pull up an intraday chart and show you how I would trade it with that. And I think we'll probably wrap up there unless there are more questions. Let's get a nice random day. This looks good. Okay, we'll watch price action this day and check it out. So overall, we are looking at a downtrend, right? Just trapped under the hourly here. And this is all off of the daily trigger, this blue. So we failed to break above the daily. Now we're looking for a lower time frame. Looks like this is our target here. This is a monthly trigger. So we reject the daily. We would expect to come down to the monthly. We get that. And now we are seeing some shake and bake happening, right? So we are seeing some big buyers. You can see these big volume candles coming in under the monthly trigger, which is kind of what we expect, right? We're coming into a long-term support. We would expect some show of force here. So now our bias is saying, okay, we think that we're going to push up because we hit the low target, we transacted it, and now these short-term ones are coming down and could potentially flip. Usually they don't flip the first time they touch, right? So this is the big show of force showing there are buyers here, but there's still sellers off this hourly trigger. So we need to wait. We need to wait. We're consolidating. We're still under our big purple trigger here, but we are starting to find support and show a construction or constructive price action on these shorter term ones, right? So now we're going to be watching what happens up at these stacked indicators here, these stacked triggers of the monthly and the hourly. So we get a push up, still rejecting. Overnight we do drift up, but for me this isn't like a valid buy quite yet, because what happens is we come back, we test the hourly, and we reject it again. So what I'm looking for here is we found some reason to believe that this level is going to hold, this monthly trigger. Now I need to reclaim the hourly so I don't get chopped up. If I'm not riding an hourly trend and I'm just saying, okay, long term, I think this is a good buy zone, it could chop here for a while, right? And that is kind of what we see. We see a couple days of pretty mean chop here. But what we do notice is, okay, overnight, still riding down short-term moving averages. This morning, we come back and we retest this hourly. And now, when we sell off of the hourly trigger, we're starting to find buyers a lot sooner. We're not making new lows. We're not hard rejecting. We're not sliding like this. We're flagging again, similar to how we were flagging here. So this is all very constructive. I love seeing flagging under a moving average that I'm looking to surge above, right? So we're seeing a lot of good stuff set up. So now we're going to be looking to ride these short-term moving averages and look for the crosses. So I'm going to zoom in a little bit more here. This is all bullish action where we're kind of beating our head against this, waiting to flip it, but we're not quite ready. Then this 5-minute trigger comes up, and we're finding support on this yellow trigger. It's a little hard to see on my screen here, but there's a yellow trigger. And so essentially, when we're flagging, we are looking for these supports to hold and flip. And as you can see right around here, we're starting to see all of these short-term, trying to get even closer so you can see this better. All of these short-term triggers are all curling up and consolidating and flagging and stacking. So this stacking of them is really, really nice. We like to see that. And then we like to just say, okay, we're going to get in off this confluence of support, because we're starting to have all these reasons to believe, all the things I've just been talking about why this trade could play out. Because of this, we would be getting in on one of these reclaims. Either this one here looks good, or maybe the expansion through. And then we're saying, okay, we still do have to clear this, but we have a reason to believe we will now. So as long as this starts working, we would expect the short-term moving averages, this red, this orange, and this yellow, to start crossing up and over. And this all provides a nice boost once this happens. So using these kind of hints, we can kind of expect this big move to follow. And as you can see, once we do find traction above this, it's just rocket fuel here. So if we're in here, we're riding up the 1-minute trigger, and we're probably going to start taking scalps off. And what we can do is we can check with our linear regression bands and see, look at that. We are out of the bands. This would have been a good time to sell. And now we are just guided up by our 5-minute trigger here. As long as the 5-minute trigger holds, we are cooking. Overnight, we lose it. And now what are we doing? See how we were overbought? And now we're not really able to get much into overbought territory. We're just riding this moving average down, these moving average clusters. And see how they also align with our midpoint and our Bollinger Band. So all of these systems, they're going to tell us similar things, right? It's not like any one is going to be super like the best to use and you can't use others. So it's all about finding which works best for you and finding the combination of them that works best for you. But in general, so, ideally we were getting out some here, and then it's always unfortunate when overnight we get the gap down, right? But that's the risk we take with swing trading. Anyways, it's hard to be long biased until we retest our rising hourly trigger again. So that'll be the next area of interest. We come down, we knife through it, but we're starting to show some chopping and bopping. We couldn't quite make it back to the monthly trigger. So we're kind of seeing that people are chasing the buy up here. So now again, I think that we would be looking to long off of a reclaim of this if we have the curling moving averages coming up, but we got to kind of get above them again. So this is all healthy basing. And then this looks like we're getting some long entries here where we have the hourly coming in. We're seeing it as support, but we're still bopping our heads on the shorter term stuff. Come back, we try to reclaim it again. And then we're looking for the short-term moving averages to curl above. So we have this red and this orange. And once they can reclaim the hourly, then we would be looking to long off the back test of those. So then we're longing the back test, like the reclaim of not only the hourly trigger, but also those shorter term 5-minute, 1-minute, 30-minute triggers that are all stacking up. And remember, we love them stacking up like that. They provide a big solid level. And then that's where we get these nice clean pushes up. And again, where do we sell? Into our golden pocket here, right? So maybe we take off some here, comes back, it's still holding the 5. You either hold or you add back. We come up even higher. Okay, now we're running even hotter and posting top wicks. I'd be taking more off up here. And then saying, okay, I'll hold runners until this 5-minute breaks. Fine, fine, fine. Then you get a nice little gap up and we are oversold into open, and I'd probably be getting out there again just because we saw what it did the other day, and we want to just be playing, scalping from positions of high risk reward and taking them off when the risk reward is no longer there for continuation. So yeah, anytime when it's up in this golden pocket, probably we're not going to just keep squeezing up like crazy. Probably a good time to de-risk and wait for it to center in the middle of the channel again. All right, so we have talked about volume profile. We've talked about the key moving averages. We've talked about VWAP and why that's so essential, and we've talked about some targets too with ATR and Camarilla pivots, stuff like that. I think that this is kind of giving you a good overview of different indicators you can use to pinpoint entries and also to pinpoint exits, because I think both are really important, right? In general, I think this just about covers what I was looking to talk about today. If there are any more questions, I will keep an eye for them and see if I'm missing anything else that I'd like to talk about. Just a fun one here, ICT Concepts by Luxalgo. I'm a big fan of too. That just helps with a few things like it draws out fair value gaps for you. It draws out volume imbalances and stuff like that. Let's see if I can get it to load. There it goes. I'll hide my other stuff so you can see it. So see, this one drew out this fair value gap here from the top of this candle to the bottom here. So then maybe I could take a short off of there and then watch when it reclaimed and then flipped it to support. Something to note there. We see order blocks being drawn out. And this kind of represents, if anybody caught my ICT strategy, this kind of represents cohorts of traders where price comes down and then comes up and reclaims and forms a block of support. So it's nice to have these levels kind of just drawn out for you already. And then it also draws out market structure breaks, this MSS right here too. So after hours when it broke here, that was very bullish. This was the high of pre-market and the high of cash session, and it surged above that at the end. So it broke that structure bullishly. And then we saw that it opened up another big fair value gap too. So maybe we'll be seeing tomorrow morning some price action dipping back in here to refuel before pushing higher. So yeah, that's just one that I have every once in a while. I actually usually don't use it just because this stuff's kind of ingrained in my head at this point. When a high day breaks, I see the market structure break. When price comes down and reclaims, I just automatically see it as an order block. And the fair value gaps, those are like seared into my brain. Like I can't see a big expansion candle without immediately going, there's the block or there's the gap. So when you're still kind of honing your system and kind of getting used to this stuff, it can be really helpful to just have them on your screen. So that's one that you can definitely play around with too. And let's see. Christopher, what do we got here? Why do more experienced traders tend to trade the SPY? I haven't been trading that long, but it seems to move slow, and I don't understand why it's so popular. Great question. So there's a few things. The SPY is basically representing the market as a whole, more or less, so it is not going to have any crazy moves, like super crazy, not going to be like trading a small cap stock that might rip 30% a day, but it provides a lot more, it's more conducive to systems trading, I would say, to scalping or to extracting a certain amount of money regularly, from the market, because you'll get consistency in the moves. You can kind of know what to expect in general in terms of the average trading range and in terms of if you're an options trader, the price of premiums for options. If you are, you know, if you trade on margin or something, you know that you don't have to have some crazy extra margin requirements or something because it's not some weird exotic instrument. Most importantly, I think it just has the most eyes on it, and so it's just a great thing that to always be watching throughout the day, regardless of what you're trading. And if you're just trying to focus on like the real meat and potatoes of trading and becoming profitable and staying profitable consistently, it makes a lot of sense to just stick to indices, right? It just makes a lot of sense to stick to the thing that everybody's watching already, to not jump around to a billion different things, to just kind of hone your system on the one chart that matters more than anything else. I think that's probably some of the reasons why. Yeah, definitely a good question. I used to really not like trading SPY much, and I just find myself trading it more and more and more because if I'm watching anything in the market, I have to refer to SPY anyway. I have to know what SPY is doing. I have to know what the market overall is doing. And then I start thinking to myself, well, hey, I'm spending all this time on analysis for SPY. Why don't I just only trade SPY? So I'd say if anybody's traded with me live and trade the pool or my server, you'll hear me talking about different stocks, and I will play different stocks, but it's always back to SPY. That's always what I'm looking for a scalp on. That's always what I'm looking to actually stay trading pretty consistently. You know, I don't always have a trade on, but I'm always looking for a trade on SPY. Yeah, great question. Stuart, what are the indicators that you rely on the most for swing trading? Great question. So for swing trading, I'm going to beat the dead horse a little bit. Those 200-day moving averages, so key. Those key moving averages. So 200-day, 50-day, 21-day, 9-day. Those are the four that I recommend everybody have on their chart. I think that they are incredibly responsive, and trying to find a downtrend to look at on SPY to show that it doesn't only just work on uptrends. So here we have the crossover, the blue crossing over the yellow, and more importantly, the candles breaking through those moving averages and breaking through the 50. So just like how we like to see the moving averages stacked up below us when we want to push up, here we have three stacked up above us. You know, this red candle on the 13th here. I'll zoom in a little bit more right here. So we have the crossover. We also have the loss of the 50. And now our target is the 200. So for swing trading in particular, I think it's really important to have these on your charts and to really start putting alerts. If there's a name that you like, you want to put alerts at the 200-day. So whenever it comes, you'll be ready to buy. So for example, JPM, I've been a huge JPM bull while holding no position for a long time. And when this happened, I was all over it. And then I sold when, well, trimmed. I still have some, but I was using this exact indicator and saying, okay, we are deeply oversold and we're hitting the 200-day. I'm in. Where am I going to take it off? When we hit the top range or the top half of this. So I top ticked it this day. I did not bottom tick it. I'm still holding a small position, but you know, I wish I had added more here, but this scared me, not going to lie. But these alerts save my life so often. I put an alert here, got in long there. What's another example that I can think of? I'm going to go back to Hood just because I know this one had it. Yeah, this Hood was great. I think Uber's another one. Maybe this was a weekly one. I think I might have been watching in here or something and seen like some support into this cloud. I think more realistically it was, maybe just a different stock, honestly. Not really sure. Trying to find some more examples for you guys. There we go. There's a good example. So MicroStrategy has been a huge winner for me, and I bought because I didn't catch the crime tap here. I didn't put an alert here and buy here. I wish I did, but I saw that it double bottomed off of this 200-day. And so then I got in right up here. And so just in general, these swing trades are super important to have these high time frame moving averages. And like we talked about, volume as well. Volume, I think, is the other big component there, just because you got to know when things matter. And, you know, you can gauge whether a candle matters by whether it's backed up by the volume. So this big green candle off of VWAP had higher volume than just about any other candle here. And you see the response off of that. Whereas other times it's a lot less clear of the follow through. And also, I mean, this is a pretty obvious example, but a huge kicker candle opened high, closed low on high volume. That was the end of the big trend up, right? Okay. Hey, Dennis, good to see you back. Thanks for your insight and consistency in spreading knowledge. Oh, you're very welcome. You missed a better part of this dip. Is it safe to enter the market? Asking for a friend who's a passive investor. Great question. So this is the part where it's really hard, right? Because if these capitulation moves happen so fast and violently, and then all of a sudden we're trading back above this key level, and we haven't seen a ton of clarity. So today or this weekend, we did get a good amount of clarity regarding China tariffs, and that is a big component. We are now, I believe what I read was we're looking at 30% flat tariffs on Chinese goods, and the Chinese are tariffing 10%. So they both sides lowered them. That's better for much better for the global market as a whole, the global economy, and it's only 6%, 5% higher than Biden's levels of tariffs on China. So kind of crazy that we did all this for 5%. I guess that's the art of the deal. But that does give us significant tailwinds in regards to tariffs. What my thesis has been for the bearishness that we've seen, obviously the catalyst was tariffs, but I do believe that there are other components here. So there are aspects of policy which are not as immediately effective as tariffs or impactful as tariffs, but they're still very important, and they can provide significant headwinds for quite a sustained amount of time. So that's stuff like our immigration policy. A lot of people don't realize how many people who aren't here legally still pay into stuff like Social Security, still pay into our tax system, and they're not able to access those resources they're paying into nearly as easily. And they're paying income tax and stuff as well. So there will be fiscal drag from deporting them, and also we will see very crucial supply chain issues as we struggle to fill the jobs that they were doing for us in key areas like agriculture and stuff like that, where there are going to be significant effects if those policies start hitting in full force. So that's a big area I'm worried about. I'm worried about fiscal drag overall in terms of just hangover from all the stimulus, all the money printing, and I'm worried about our debt that needs to be refinanced as we kind of enter this period of heightened tensions with other countries. So hopefully the tariff news will resolve in the next 90 days for the most part. And that won't mean that we're out of the woods completely, but it will give us some latitude in terms of goodwill with other countries, because we need goodwill with other countries. One, because we're a net importing country. We import 70% of our goods. We need to have good relationships with the countries we're importing from. I strongly push back against the narrative that we're being taken advantage of by Angola and Cambodia and the penguins on Herd Island. I think that we have a very good situation where we print money and we buy tangible goods that we need with that money, and we are not being taken advantage of. So that's how I would view that. We want to continue those relationships, and we want to basically have countries keep buying our debt. And that is one area where I see potential troubles if we cannot maintain good relationships. So hopefully this news on today and yesterday, I guess, is a sign of things going forward over the next couple months. If so, the market can respond positively. I know I've been saying a ton of macro stuff, and you just asked for a yes or no question. So is it safe to invest in the market here? We are over the 200-day. We're surging over it, but we are very extended. There are significant bullish news, tailwinds in terms of the Chinese tariff stuff. There is also significant unresolved headwinds that would take longer to unfold. We are just about to start seeing, shortages of things, we were about to, until this China news, kind of saved us. So hopefully there won't be much disruption in terms of actual supply chain stuff. And then we should be able to see, I I'm looking for 590 to 600. So if you're a passive investor, you can start DCAing. Unfortunately, it would have been better to start going, just doing it the whole way down and up. If you are a little bit more of an active trader, you can wait for a little bit of a dip and watch that 200-day in particular. That's not too much of a dip. I would expect us to get. I mean, this is a lockout rally, so it can really it can really explode like this, and it's tough. And so that I'm underinvested long, but I'm not short right now because I was expecting something vaguely like this. If I was expecting this, I would have been full port long, right? So for me, I'm only about 50% invested, and what I'm going to be doing with the last 50% is I'm going to essentially be looking for, if the 200-day holds really strongly, I'll add a little bit. Ideally, I'd like to see this 50% fib renegotiate, and that would be 550 roughly. So if we'd get a 550 test and hold, I'd be a buyer there. But honestly, it could be really tough to say. I am not 100% sure that the bottom is in, but I've been saying since 500 that even though we could hit 400, I think the bigger risk is not having any market or money invested in the market. So here's the good news. If you missed it and you feel like you can't chase this, I understand. But when a market is turning up, and if it's like a sustainable up move, what'll happen is all of these other charts, they'll start setting up, and we'll get so many trade opportunities that we don't need to only trade SPY. We don't need to just be long the market as a whole. We can start looking at other areas which are just starting to turn up and catch some really big moves in that regard. So because you guys are here, oh, wow, actually viewers are up from 20 minutes ago, despite all my rambling. So thank you. Welcome, new guys. Because of this, I'll give you a little sneak peek in my newsletter here and what I'm watching this week. So I think that the quantum basket is showing a lot of potential for a big move up. I think that these names are not necessarily really good midterm investments, in a sense that they are highly volatile and the tech is very, very forward looking. So you could buy them now with a really long time frame horizon and say, I expect quantum computing to be a very real component of our economy going forward. And if you're doing that, I would say that you would want to invest in some of the best names. So QBTS, this is my favorite. And you can look at it two ways. You can say, oh, it's up 1,000% in the past year. How can I buy this? You can also say it's just breaking out of its IPO base here, just attempting to, and it has room just sky high after that. One thing that we can look at is kind of a indicator of what could happen is IONQ, which is the previous leader of the sector. So this was their IPO base, and they did a very similar thing where they came down. Where's my measuring? There it is. They came down 70%, and then they ripped 500%. But that wasn't the real move, right? That was just breaking out of that base before, they ripped 700%. So these names have a lot of juice, a lot of torque, and QBTS posted great earnings results, and they're just breaking over this key level here, this essentially $10, the IPO price, or the SPAC price, I guess it was. And so we could get a really, really explosive move here. This is the top watch. Another that I think is very good is RGTI. And again, you'll see these big cups and big handle patterns starting to shape out. And this one, again, is right over IPO base. OTP, don't worry. We don't listen to you when you ramble. You're smarter than me. You're smarter than me. I wish I could turn it off sometimes when I'm hearing myself ramble. But I do think that the extra words are important, just in the case of there are a lot of factors at play, especially when you're asking about macro stuff, right? So I don't want to just say yes, buy long. I don't want to just say no, I'm bearish, because it's really not that simple, and we got to change with the data points. I wish it was as easy as that, but sometimes we need to talk it out. So yeah, I'm watching these quantum names. I really like these. RGTI is reporting on Monday, I believe. Oh wait, they did report. What day is it? I still think it's the weekend. All right. So they reported they're down a little bit, but it doesn't look too bad. I'm going to be keeping an eye on this. And let's see what they're doing today. Pulling back just a little bit. So this is kind of ideal. I'd like to see it pull back just a little bit more and see what it does at $10 here. So I'm going to put an alert here and keep an eye on here. And I'm going to pull up my newsletter and just show you guys what I'm watching here. Bear with me 1 second. Alrighty. So I do believe that Hood has a lot more room to go as well. That's one name that I'm quite bullish on. We've been long Bitcoin. We're still long Bitcoin. We've been doing mass MicroStrategy. And then emerging markets are very interesting to me. So actually, well, let's just switch back to the charts. Let's do it on the charts. Y'all don't want more text. You want pictures. I got you. So Latin America, I think, has a lot of potential just in terms of the next 5 to 10 years horizon. But specifically right now, I feel a lot of them are breaking out. So let's look at a few of those. First, let's look at the leader here, ARGT. This is Argentina, and it is doing incredibly. Ever since it's kind of shifted to a neoliberal based economy and gotten a lot more involved with global trade, they've been just absolutely going up and through the roof here. I've had small positions since down here, but it just keeps setting up and breaking out. As you can see, it loves flagging into the 200 and then breaking out further. So flagging into the 200 day, breaking out further. Easy trade here. So you can look at some specific names in the sector, but in general, I just like the ETFs because I'm not super knowledgeable about every single last detail of all these different companies. It's just a lot of different variables when you're considering with something that's a little bit further from home and a little bit more foreign than what you're used to investing in. So I like ETFs for that regard, or I will defer to experts who actually know the product or know the space of some of these companies better. So EWZ is my top watch this week. This is the Brazilian ETF. We have a major long-term base building here, right? We have these are monthly candles. We have a big downtrend line, and when you zoom in here, you can see we are closing over this long downtrend line. We have a more defined shorter-term downtrend line we're also closing through. We have our purple 200-month moving average. We were always talking about buying dips off the daily 200 or the weekly 200. This is reclaiming a monthly 200. If we go to the weekly, it's powering up off of a 200-week moving average with a nice little double bottom here that we were watching and in from around here. And then on the daily, we are also flipping this 200 for support, right? So now, like we talked about, we're over the 200. We can ride these 9 and these 21 EMAs all the way up. So I'm a major bull in Brazil. One of the names I'm playing is STNE. You can see I'm long from down here. And this one has a ton of room. We'll pull it up on the monthly here. This is a fintech company investing in people and small businesses in Brazil. So it's a great way to capture beta for an emerging market like this. So I love this name. And I love, let's see, we talked about Argentina, Brazil, and I love Colombia as well. This chart is very, very promising to me. So the monthly here is basing after a big move down. So big move up, basing. If anybody caught the Wyckoff seminar I did last weekend, we have expansion, the markup. We have distribution. We have the markdown. And now we have an even more extended base building here. So in this base, we have finally broken out of the lower high, lower low. Then we got a lower high, higher low. Now we're getting a higher high. And I would very much expect it to surge, if not now, then very, very shortly to sweeping this high up here. And if we can break above this high, which I'm pretty confident we will, then we will start expanding up, marking up back into this range here. So a lot of room up. This is a very high confidence sector and a very high confidence kind of basket in these emerging markets for me. I'm a firm believer that the United States is not going anywhere, but we will be shifting into a more multipolar global economy where there are more alliances between other countries. There's more trade happening between other countries, and these other countries that are emerging markets can start to benefit from the lack or from the slight release of pressure of the dollar hegemony that we currently see. So the dollar's falling, and that gives all of these other economies and other countries a chance to make up the distance, essentially. So I will leave you with a few more things that I'm watching here. Oh, we got T-Liney trading, Argentina looking fantastic. Yeah, I'm not sure if you caught it. You might have just missed it. But yeah, we talked about Argentina. It's absolutely going parabolic. And this is basically from the adoption of policies which allows them to integrate further with the global economy. So shifting to a neoliberal type government structure, in general, just playing ball with the West, so to speak, is always a very prudent move financially. And you can see the markets love this. I would love to see Colombia, who's following a similar trajectory politically. I would love to see that happen here too. And Brazil as well, I think, is very, very undervalued personally. There we go. So yeah, big bases, tons of space. I'll give you a few more here. I am still a massive China bull. Nice candle today, very nice. I think we've got a ton of room up. This is a big old base for 15 years, right? And say what you will about the Chinese government structure, but they are getting a lot of things done. There are a lot of reasons to be bullish on their economy. Their tech companies are putting out amazing products, and they're trading for dirt cheap valuations. Baba is trading at like a third or something of the valuation of any comparable U.S. tech company. And I think that there's a lot more room to the upside for a name like Baba than there is a name like Google, personally. So I love Baba. I love PDD here is very tight as well. And one more for you. Africa is another area where I think we could see a ton of development and a ton of infrastructure build out and a ton of investment. So I got long JMIA last Monday at 250, and it's currently trading at 350. So we've had quite a power up here. Got in on the, let's see, I was expecting a little bit more of pullback here. We did get a little bit, but it's basically an inverted head and shoulders bottom now surging to fill the gap here. So I will be taking some of my profit off at 385 and letting this ride. But again, all of these themes are basically saying we are going to be looking towards investment in other emerging markets, and we would expect those to continue to outperform long-term outperform U.S. markets over the next five years or so. None of this is for sure, but this is just kind of the thesis I've been playing all year, and it's been continuing to play out. So I wanted to bring you guys in the fold there just because I appreciate you all showing up. And let's see, is there anything else I want to talk about from my newsletter here? Nothing too crazy. EV names as well, just to end on that. Tesla doing the thing? Yep, Tesla doing the thing. I didn't look at it today. So I was going to say, if we get a clean look, a clean back test of the 200, I'd be a buyer. We didn't get it. It looks like I missed the trade. I would expect expansion up to up to 350 here. Other names you can look for in the space are Rivian, which I'm sure gapped up too. Yep, gapped up too. Looking strong. And XPEV. So now we get a little combination of our emerging market basket and our EV baskets here. So nice gap up there. The weekly, it'll look better. Yeah, that's beautiful, right? Nice double bottom, nice defined levels, a nice consolidation over the 200-week moving average, and a gap up. So very cool. All righty. Let's go over some stuff here. Rejecting the utter bankruptcy of socialism to pursue libertarian prosperity. I will say that any system that is at odds with the winner is Western capitalism. Once they start playing ball with the system, it opens up a lot of doors for business perspectives, right? I will not get into why their forms of socialism were failures. I don't think it is necessarily the fault of socialism so much as the people in charge, and yada, yada, yada. But that doesn't matter. What matters is they're playing ball and the market is responding, right? As we see more countries like Colombia do the same thing, we will continue to see US capital, Western capital flowing into these countries and capitalizing on the opportunities presented. So we got that going on. Got SB talking BTC. Yeah, so I'm a massive Bitcoin bull still. I've been long this time around. After catching this move up, I was long from 8,500, 8,400. I'm still holding half of my position. I sold half of my MSTU because it was MicroStrategy earnings and I was up 60%. So still holding half of this, still looking fine. I think Bitcoin is, let's redraw that like that. This was a megaphone. It's breaking out. It just looks like it back tested today and wants to hold. I'm not 100% sure that it will quite yet. I think what we could be seeing is another megaphone pattern building out like that. So what we'll be keeping an eye on? We'll be keeping an eye on that 9 EMA, which it tagged really cleanly. And more importantly, this 21, I would expect these to come up and flag out here. Maybe it pushes up again and comes back a little lower to tag this 21 EMA on the rise. In general, it seems pretty programmed for new all-time highs. I believe what we are going to be seeing here is an extension out of this cup and handle pattern to the two, what's the word I'm looking for here? They're basically double the size of the cup wall here, which is a very standard target. If anybody caught my my Bulkowski pattern webinar about a month back, we talked about this a lot. But yeah, it looks amazing. It looks like this is all potentially one big megaphone for a further breakout, but it's really hard to say. What I would say is this 120 is an area of interest in my main next target after we sweep all-time highs. Another flow. Hello, just subbed and shared the live stream on Facebook. Thank you. Appreciate that. Watching the latest Legal from YouTube. Mayor arrested. Oh, wow. I will have to check out. It's been a while since I watched Legal. It seems like he has good stuff going on. Let's see. Oh, you're too kind, Dennis. I appreciate that. What else we got? VSync, yeah, we can chat on another stream of whether he is aligned with or opposing the establishment. Yeah, that's maybe a little too spicy and a little too far off topic for this. Let's stick to the technicals, brother. But let's see. Tyler, you are very welcome. Geez, can't talk. Thoughts on Amazon short term? Let's look at that, and then I think we're going to wrap up here unless more questions come in. Wow, what a gap up. Thoughts short term. Looks like it's forming a double bottom off of previous support here. I'm just going to, you know what? We're going to start fresh here. No new line or all new lines. So this was an area of previous resistance. We traded above it. We came back. Now it's previous support. We can keep it real simple and say that this is technically not a bad chart, technically solid. We're pushing up here. I mean, it's hard to bet against these companies, right? They're going to go up and to the right unless the world ends. The nature of our, monopolistic capitalistic system is what it is, where the biggest companies will continue to do well. And I would not expect that trend to change anytime soon. In terms of technicals, we've got the major level here. It flipped it, it held it. We've got the rising 200 week. It didn't even need to negotiate there. Big picture, this is still consolidating for a bigger move up. We can even go to like a yearly candlestick and see what's going on. Look at that. So we consolidated for 4 years, and now we are back testing off of, perfectly back testing off of the top of this area and pushing, right? So that's why these levels are really important to look at on higher time frames here. But in general, see there's the old yearly high. We're just was resistance, we undercut, and where do we undercut to? This support level. And on a yearly chart, yep, just catching up with the moving averages, just catching up with the last consolidation. So this is still up and to the right. I have nothing but good things to say about longing quality, and you can't say Amazon isn't quality, right? So yeah, I like it short term. What I would expect is that it's going to want to Yeah, there we go. It's going to want to play with this previous high a little bit. I would expect a little bit of flagging here before pushing higher. That being said, we really have to watch the market. We could be running too hot and get a headline that tanks us a little bit. I'm not seeing anything on today's candle or anything saying that we're done pushing up. I'm just saying if that does come, we are running hot. We could get a pullback into a back test of the 200-day moving average on not just Amazon, on SPY, on anything else. So yeah, something to consider there. You could be looking for long entries there. If you are long already, just, hey, hang on tight and keep on ripping here. Your next targets up are probably going to be, let's put a fib on. So we surge through the mid-range here. Very good to see. Very good to see. What we can look at are, we saw a few sellers step in at the 0.6 or 0.62. Very logical, very normal. What we would like to see is the bare minimum for if we're breaking the range up. We would like to see at least this intermediate 0.7 and probably this 0.78 get tagged and really squeeze the shorts out. Then we can chop around a little bit before we're negotiating up further. But I think that what we would like to see here is a few days of flagging, holding this high, definitely holding the 50 fib, call it 200, and then a nice push up to 220 to 225. That's what I'd be looking for there. And I think that is a pretty good place to call it. I don't want to get too off topic here. We're kind of all over the place, but I love it. I love it. So thank you guys so much for joining. Unless there's any last minute questions, I'm going to wrap it up here, and you guys can catch me all on Trade the Pool stream tomorrow morning with Money Mitch and Michael Noss. And then we will be doing more webinars later in the week on Friday. Let's see. You are very welcome, Tyler. Glad to have you here. So we go live at, let's see, what is it? 9 o'clock market time. So half an hour before the market opens, we will be on there. We'll be talking about what we're watching. We'll be doing live trading once the market opens. We will be just answering any and all questions. We'll be having a good time, vibing out. It's a good group. You're always welcome to join. I really enjoy my time on there. And then throughout the week, you can find me in my Discord or in the Trade the Pool Discord. You can find my Discord on my Twitter. You can find Trade the Pool's Discord on their Twitter as well. Or I'm sure it is on there. I can drop a link for you guys. The Discord for Trade the Pool is really, really great. I've been having a lot of fun just dipping in there midday and doing some live trading with the guys. Really good traders in there. I'm surprised, or happily surprised. Okay, I'm not able to invite, but I'll get some way to get that information to you guys as well, because it's a really good place to be. You can find us in there midweek, and then every Friday, 15 minutes after the bell, you can find me on Trader TV, and I do a little spot there regularly. And after that, we do the webinar every Friday at roughly 40 minutes after the bell, as soon as I'm done on the Trader TV live. Besides that, yeah, come hang out, trade some prop accounts with us. Trader TV or Trade the Pool has some really great options for flex accounts to swing, or just you can do just about any trading strategy you would through one of these types of accounts, and all while minimizing your risk and having a great community to hang out with while you do it. So yeah, hope to see you guys in the future. Come keep learning with me. I learn more every week, and you guys help me do it. So we'll learn together and keep on making some money. Thanks for joining. Take care.